everybody. How you doing? It's Uncle Bruce here with Stock Markets with Bruce from Calgary, Alberta, Canada for September it's Wednesday, September the 15th. Good day to all of you and welcome to the middle of the month. Here we are, mid-September. I mean, in 3 months it'll be December 15th, and that's just before Christmas. I mean, are you out of your mind? Are you kidding me? Whoa! Welcome to the channel. You're looking at a homeless man right here. Jennifer and I have nowhere to live. We're right now at our daughter's place in Calgary. We're about to move out. Secret location, surprise. We'll make it a surprise. We're about to head out and leave her alone and be on our own. Truly homeless. I got to find a couple of cardboard boxes and some sleeping bags and see if we can find a nice warm sidewalk somewhere. We'll let you know. Just you just hang in there. We'll find a place with Wi-Fi. This is Bruce reporting from the street corner. What can I say? Good morning, good morning, good morning. Welcome one, welcome all. What is happening today, and what is going to happen today will be the big question. It always is the big question. We are right now looking at a mixed opening. We have the Dow down 14 points on the pre-market. That's a nothing burger. We got the S&P up three and a half points. That's nothing. That's a nothing burger. NASDAQ up 30 points, which, we'll take it. It's a little bump up. We've had a few down days. Crude oil up $1.05. The folks around these parts are smiling. Calgary, Alberta, Canada, home of Canada's oil patch. 70, what was that again? 71.50 a barrel American. That's about 86 Canadian dollars a barrel. You can make money in this town with $50 oil. Well, at least you can break even around this town with $50 oil. You can make money beyond that. And when you're at $30 beyond break even, yeah, it starts to help out. And with low interest rates, a lot of the oil patch around here are cutting their expenses, have been for years, and are knocking off their bankers. And basically saying to their bankers, thanks, but no thanks. We don't want to be indebted to you guys because if rates go up and we owe you a bunch of money and oil drops, we got the worst combination. So right now with oil where it is, and with us not hiring a lot of people and having a lot of people work remotely, we don't have those downtown office rents, so we've been cutting that back. We are cutting expenses left, right, and center here in the oil patch, have been for now 5 years, and we're getting leaner and leaner and leaner and meaner on improving our bottom line. My January Matterport calls are almost up 100%. Should one be patient and let them ride a while yet, or does one be greedy and take the game? B Fitz, you've got a couple of choices you can make here, and they're all good. Choice number one: you don't do a thing. Just let the stock continue to roll along. Every time it goes up $1 a share, your contracts will grow nicely. I don't know what contracts you have, but if you've got 15s, you're probably enjoying 50-cent gain on every dollar, or maybe 60-cent gain on every dollar of movement. If you have 1250s, you're probably getting 75 cents to 80 cents a dollar movement. If you have 10s, I don't know if you had 10s, but if you had 10s, you're probably getting 90 cents a dollar. So you can just let the stock continue to go and do what it's doing, because it will go higher. In my opinion, low 20s is doable. That's number one. Option number two, you could sell them right now, take the money off the table and say, thank you very much. I really enjoyed myself and it's been a pleasure. You could take that money and turn around and just buy the shares directly. Again, it's a question of how valuable you are. If you have $15 contracts and you've doubled your money, and you've turned 1,000 into 2,000 or 4,000 into 8,000, whatever you've done, you can now buy stock. Obviously, if the shares go higher from here, they reach the 22 range, 24 range, you will have a much more money. I mean, you might be double or triple or quadruple your money, and at that point, you might be able to buy even more stock than you're getting now in numbers of shares. But the other option you have, rather than just sell and buy stock or buy something else, you have a rollover option. You can do a rollover. And now there are several ways you can look at a rollover scenario being long calls. One, you could say, all right, for however many you have. You have one option right now. You get 10. It doesn't matter. You could sell all your contracts right here, turn right around, and buy as many contracts as you could afford with an April expiry or later, either at the same price that you have now or at a higher exercise price due to the fact that the shares have gone higher. You could do that. Another way to look at it is you could say, okay, I have more money now than I started with, obviously. Um, I'm going to take half the money and put it into something else, and half the money back into Matterport stock options. And I will buy contracts further out in time. I'd like to go to April at least. And I will buy a higher priced exercise price contract. So you might buy 20s, the $20 contracts. You might buy 22.50s, but with only half the money. In other words, the money you started with is what you're willing to reinvest in new options further out. The money you've made from your original will go into your account as dry powder for something else, or not. You'll decide today or not to reinvest it, or you just take that money and pay bills, whatever you need to do. So you could play these options. You have these choices in front of you, many choices. What are your thoughts on $25 January 2022 puts on Matterport for $8? So I'm assuming you'd be writing them. I'm assuming you would write a put. Matterport, $8 with a $25 contract. So you would be buying the stock for $17 if you were exercised, and or if the shares go higher in price, you will score some, if not all, of that $8. Right? Gotcha. I'm not a fan of the number. Like the contract is $6 in the money at $19 a share. It's a $25 contract. It's $6 in the money. There's only a $2 premium. So I'm not a fan of writing this put for only a $2 premium all the way out to January 22. That's coming up in 4 or 5 months. I'm not a big fan. I'm not opposed to it either, though, because I like the idea that Matterport reaches 23 a share, 22 a share. These contracts are only worth $3 or $4 each, and you score half the money. So I like that too. I mean, realistically, every dollar the stock goes up, you will make $1 on this contract. But I don't know if the premium is good enough. I'm not sure if the premium's good enough, but it's worthy of a serious thought. It really is. My 12.5 ME calls are down 75%. Got them when the stock was $11.50. Think I should take the loss and cut my losses, or just hang tight, roll it into a lower strike price? Do nothing. Don't even flinch. Just sit right where you are and do nothing. You either will win or lose on this investment. The ME shares are at 8.30 today. They're up 4 cents. Nothing much going on. But this is the kind of stock that could at any time have a $2 update. And all of a sudden, we're going to be talking about a 10.30 stock price. All of a sudden. And all of a sudden, you're going to go, whoa, I'm not down 75%. I'm only down 40%. And then a week or so later, you get another $2 shot. And the next thing you know, you're at $12.30 a share. And you're in October. And you're going, oh my God, I'm glad I didn't do anything, because back in September, they were worth nothing. And here we are a month later, and the stock, this thing is almost at book value. These things are now almost what I paid for. I would do nothing. Just let the stock, let the company do what they have to do. Give management a complete pass to just make deals, because they are sitting on a mountain of money, and deals are coming. Just let them happen. When we start writing contracts on stuff like Matterport, how long should we be tying up our shares for? A month, a year? What do you think? Well, depending on how fast and how far we go, I want to get the stock through 20 a share. If it just gets to 20, 2050, 2030, 2060, then you might be writing 21s or 2250s, depending on which series are available to write. But you might only be writing contracts that are good for like a month or so. If the shares, however, run right through right through 20 to 21, 2250, close to 23, you might be writing 25s, 26s, 2750s, and you might go out a month or two. We'll have to wait and see when we get there. At the moment, it's too early to confirm, but let's see what the stock shows us when it gets to that level, because we may find that the stock here is at $19, $19.50, and tomorrow, day after tomorrow, a buy recommendation comes out from analyst so-and-so at firm such and such, and they call it a $30 stock. The stock might have a $5 day and go from 1950 to 2450 in one 6-hour session. We got to let that happen. And so we don't want to over rush it. We kind of just go, okay, you want to run to $25? You go ahead and run to 25, and I'll meet you. I'll meet you at the options table when we get there. And maybe we will then write 2750s or 30s, and we'll see what we can take it. Apple's pulling back. So what's the best call for, say, January or March? January, March, I would be looking at buying in the money Apple contracts, way in the money, and then writing short-term covered calls against it as a poor man covered call strategy on Apple. So you get yourself 120 Apples, 110 Apple in the money contracts, good for next year, and then start writing 2 and 3 week timing contracts, call contracts against Apple, about $5 out of the money, $4 out of the money, and taking in the premium while you're holding these contracts. That's what I'd be doing if you can afford to do it. So this Rocket Lab long put strategy everyone is looking at. Why January? Why not go further out for even more premium, even out to 2023? If it's a high certainty to go over 20 again, that is, well, everyone has their reasons, but I like the idea of January because it's a longer term contract, but it's not too long. It's a premium. $9 roughly was a $9 premium, or a $9 income on a contract that's what is it now, it's 4 something in the money, but a lot of premium on it. I like that. That's what attracted my interest to it. But yeah, I mean, you could write a longer term if you wanted to, but I thought it was a pretty good return. Would you buy 80s on Royal Caribbean or lower? I would buy the closest to the money put you can afford. That's the way I would go about it. So if the shares drop to 65, you already want to be a big winner. If they go to 50, you are scoring nicely. I don't want you to have a $10 move just to make a couple of bucks. I don't want that kind of a scenario. Folks, check out stockmarkersbruce.ca, catch a lesson 2 or 3 or 4 or 10, and become a little smarter than others. You only need to be smarter than half of the market players.